I've been trading the markets since 2017, and in this video, I'm gonna be sharing with you guys the only two entry models that you guys will ever need. Forget any other YouTube video that you guys have seen. There's gonna be so much value in this video, and it's not that complicated. It's pretty simple. So dedicate the next 10 minutes or so to watching this video fully. I can almost guarantee that after you watch this video, if you took, let's say, 10 random trades, even if they're not the best setup, you'll probably still be profitable if you're using these entry models. There's gonna be so much value in this video. Make sure to stick around until the end. Let's jump into it. So here are the two entry models. Okay, I have entry model B blurred out for now. This is literally all you guys need. I can almost guarantee it. And after this video, you can go and back test it yourself. So we're gonna start with entry model A, okay? This is an inversion entry model, okay? Using something called an inverse fair value gap. You guys probably know about them by now. If you don't know what an inverse fair value gap is, it is pretty much as it sounds, okay? We have a bearish fair value gap, which is a 3-candle pattern on your chart. And an inverse is when price closes above that previous bearish fair value gap, inversing that bearish fair value gap, meaning price is now closed above, signaling to us that order flow is shifting to bullish and we can look to get into a trade. Okay, so if you're like, what is all this on my chart? What are these money symbols? What does this mean? I'm going to explain it all, okay? So when you're trading the inversion model, you need to have a liquidity sweep first, okay? So you need to have some sort of low on your chart. That price comes down below, takes out the liquidity or open orders. If you guys didn't know, liquidity is actually what moves price, right? Open and pending orders. Ideally, we should like to see a sweep of an internal low, meaning a lower time frame or local low, and a sweep of an external low, a higher time frame swing low, that we're sweeping like all the way over here. But just for this video's sake, we're gonna say a sweep of internal liquidity. So we have this low right here. Price comes down, takes out that low, and then reclaims that low with an inverse fair value gap. Also need to make sure that we are delivering from our POI. A POI stands for a point of interest, okay? I like to trade key levels, higher time frame order blocks. This could be a higher time frame fair value gap, especially for my NQ traders. This strategy works very well if you're trading NASDAQ on, let's say, a 1-minute time frame. If you have, let's say, a 15-minute or a 1-hour fair value gap here, that would be your point of interest. And then you look for a 1 or 2-minute inverse fair value gap, sweeping this local low after delivering, meaning bouncing from that higher time frame fair value gap. So that could be an example of a POI. Make sure you have that level identified and then look for this entry model off of that higher time frame level. Now, for an inverse fair value gap to be valid, we must see a candle closure above that bearish fair value gap, right? Not a wick above, but an actual candle closure above that inverse fair value gap, and that would be our entry trigger. If we don't have a bearish fair value gap here that we inverse, then we move on to entry model B, which I'll jump into in just a moment. Now, to make this strategy even more profitable, there's a few different things that we can do, okay? The first is to have a clear target, in this case, an equal high. So if we look left in the current price action and see that, okay, we had one high right here and a second high that never came above that first high, this would be considered an equal high, which is a strong draw on liquidity. I've already made a video on draw on liquidity, but this would be a really nice target. So if you see that we have an equal high and then you see this formation, there's like an 8 out of 10 chance that price is going to come up to at least take out this high. Even if it eventually does move lower, you would have hit your full take profit. Make sure to watch this video until the end. I'm gonna be sharing with you guys another really nice confluence to increase your win rate even more with these entry models. Our invalidation for this trade is going to be a hard stop loss at that most recent low or a candle closure below this inverse fair value gap. And we're gonna be moving our stop loss to break even after the most recent high is met. So as soon as price reaches here, our stop loss is at entry and we're targeting that higher time frame liquidity. Okay, moving on to entry model B. This is probably my favorite entry model. No, this is my favorite entry model of all time. Okay, this is the trademarked EzTrades 1-2 setup. I've been talking about this formation for literally years on this channel. You can go search on this channel, 1-2 setup. This is an incredible entry model. I love this so much because it has a very clear invalidation and you can also use limit orders, right? So when you're trading an inverse fair value gap, you can't use a limit order. You have to manually market order once you get that inverse. But when you're trading the 1-2 setup, you can simply set a limit order here at the golden pocket, set your stop loss, and then set your take profit, right? Very clean setup. Very similar in a lot of ways to the inversion model here. We have this low, right? Sweeping this internal liquidity, tagging into our POI or our higher time frame fair value gap. But this time we don't get any bearish fair value gaps, okay? We don't see any clear, right? Like noticeable bearish fair value gaps. So in this case, what we will do is wait for a market structure break, meaning we are waiting for price to create a higher high. At this point, we draw our fib from that swing low to that swing high right here, set our limit order at the golden pocket fib with our invalidation at this low right here. And again, for the highest probability trade, we are going to be targeting this external liquidity right here. So these are the two entry models. Let's actually jump into some examples on our chart. Just for this video, I'm going to be using this coin called Aster. This is a slightly newer coin, but there have been a ton of setups using both of these entry models. So I will show you guys what this looks like. Okay, so you can see we have these lows here. That price comes down in sweeps. We are also in a higher time frame uptrend at this point, so longs are valid. All we're doing here is going to a lower time frame and looking for that entry, right? So you would say that this is your higher time frame POI. This is your lower time frame sweep of liquidity right here. So you can see that price comes below this low, but it doesn't displace below, right? It just sweeps this low and instantly reclaims. There are two entry triggers here. You have your first entry trigger here, which is this inverse fair value gap. That would be your first entry. Again, our stop loss would probably be at this low. Do we have an equal high target? We do have a lot of liquidity right here with these highs that have not been ran yet. So this would be a really good target in this case if you're going to take this trade. Probably move your stop loss to break even at this high right here. And again, your stop loss would be a candle closure below this bearish fair value gap. We also had this order block here as well. Move our stop loss to break even right here. And then finally, we hit our full take profit here at this high. Now, another piece of confluence I like to use if you guys are like, what is this indicator on the bottom of your screen? This is an indicator that I've custom coded called the Easy Oscillator. When I'm looking for an entry, I like to look for bullish divergence. Meaning as price is making a lower low here, as price is sweeping this previous low, momentum is actually increasing to the upside. So we refer to this as a bullish divergence, just another added piece of confluence. And we've also coded entry model A, the inversion model, into its own indicator here called manipulation X. So if you guys want to remove some of the guesswork, click the first link in the description below to get access to these indicators. Again, it's not needed, but it does help me a lot. Now, let's say for some reason you didn't get in here, okay? You missed entry model A, you were sleeping, whatever it may be, you couldn't get in this. How do you enter this trade? Well, this is where we use entry model B, okay? Again, we're still looking at the same setup, right? This setup is still valid. We're still at a higher time frame level. We got that sweep. We got that bullish divergence. We also got this market structure break here, okay? Meaning we created a higher high. So this is where we would pull our fib from the swing low and we have our entry model B. Comes right down to the golden pocket, set a limit order there. Again, stop loss at the swing low, moving our stop loss to break even, probably here, maybe here, one of these highs. And then again, targeting the same level for another 3 risk to reward ratio. So entry model A and B here on this trade. Okay, so cool. We're still in an uptrend. We're still making higher highs. I see we have this 5-minute order block here. Okay, so boom, right? We have a sweep of liquidity here into our 5-minute order block, which is our POI, right? We have an inverse fair value gap right here. Bullish momentum on the oscillator. There is our entry, stop loss at this low, stop loss to break even at this most recent high, and we have a really nice equal high target right here. Let's say I missed this initial entry. This is where we use the 1-2 setup, bullish divergence as well. This is my major draw on liquidity. So 3 risk to reward ratio. Let's go to a little bit of a higher time frame just to make this a little easier to read. So this was actually the other day. Okay, so we had a sweep of liquidity here. Also, we were at a higher time frame key level, right? Drop to a lower time frame, looking for entry model A or B, right? So we sweep this low. There we go. Bullish divergences. No inverse fair value gap here, but we did have this market structure break. Draw our fib from the swing low to the swing high. Enter at the golden pocket. Stop loss at this low. Bullish divergence here. Beautiful trade. Move our stop loss to break even at this high right here and target this bearish fair value gap right here. Sweep of liquidity right here. Here is the inverse, meaning the candle closure above. Hard stop loss right here. And you'd move your stop loss to break even at the moment. And you'd be targeting this high as your take profit. Now, there's so many examples of this, guys. Like just sweep of liquidity at a higher time frame key level, right? Waiting for that market structure break. Like literally so many examples, even on a lower time frame of the manipulation model or the inverse model playing out. Let's go to like a random pair. Let's go to like Solana USDT here. Okay, so again, we are at a higher time frame key level for Solana. Go down to a lower time frame, right? Looking for your entry here. There is your market structure break right here. Draw the fib from the swing low to the swing high. Here is your stop loss. Even if you were looking to scalp Solana on a lower time frame, sweep of liquidity, bearish fair value gap right here. You know, personally, I'm putting my stop loss at this low, guys. Again, sweep of liquidity into the 1-2 market market structure break, limit orders at the golden pocket fib, bullish divergences, boom, boom, target this high. Again, we're in bullish market structure. We're looking for longs, right? Bearish fair value gap right here. We get that inverse, enter the trade, stop loss at this low, lower time frame market structure break. Now keep in mind, we're not at a higher time frame point of interest here. We did get that break of structure. So, I'm drawing my golden pocket fib right to the golden pocket fib, guys. Stop loss at that high. Another 3 risks to reward, probably moving your stop loss to break even here, at least taking partials at this bullish fair value gap. Please leave a like on this video if you guys are still watching this, because this will actually change your life. Like, just study this video, take notes, go and back test this. But that's going to wrap up this video, guys. If you guys want to follow the exact trades of full-time traders, as well as to get access to our custom coded indicators, click the first link in the description below. Make sure to leave a like on this video because this was an absolute banger. Subscribe to the channel for more trading content, and I'll see you guys next video.